So I was thinking about the scope of tonight's video, and what struck my mind was it's time for a stock picking video. So I will lay out three stocks going into 2026, my thoughts of why I think they are in a good position going forward, where the market are at the moment, and both risk with the stocks and also potential positives. And the first company is Microsoft. So Microsoft is one of my favorite companies out there. I like the diversity of their portfolio. They have the Office 365, their intelligent cloud, Azure, and obviously the Xbox with the expansion of Activision Blizzard. And I also feel like the latest 5 years that the stock has performed being quite solid. Um, the valuation isn't sky high, so if you see from January 2025, it was quite close to where it is now. So it's not as high as, for example, Alphabet. So in terms of valuation, I don't think Wall Street has fully priced in the momentum that Microsoft is in at the moment. So following their annual revenue streams here, you can see they're steadily increasing their um, um, their income. So going from 2021, 168 billion dollars, now 198 billion dollars, 2023 212 billion dollars, 245 billion dollars, and yeah, 281 billion dollars as of 2025. So I just like this type of steadily increase, and also the net income. Despite everything you are hearing about Microsoft and the big capex, the net income of the company is just steadily increasing, and with the market cap around 3.5 billion dollars, I think at the moment, it's quite easy to figure out the metrics here, with the price per sale around 12, maybe 12, 13, and with the net income of 102 billion dollars, I would say that's maybe a P ratio of 35. And with a company that is growing so much, especially in the Azure part of their business, the clouds and intelligent cloud, etc., I think it's a quite juicy valuation. And especially when we have a lot of uncertainty in the marketplace, having the type of cash flow that Microsoft have, and also if we look at the balance sheet, um, expanding, the balance sheet expansion, and also the amount of liabilities through assets here, we can see that they have an amazing balance sheet, one of the best out there. So this company can just, they don't have to care about what's going on in terms of macroeconomics, etc. They are having that long-term foundation to just attract and build and do what they want. It's all about the vision and the execution of the company. I also read this article about their AI advantages, and I think AI is a huge part of the future. And as you know, Microsoft has an ownership of OpenAI, 27%. So that's makes them obviously one of the best, most knowledgeable companies out there, and also can integrate the, what can I say, the deepest part of the AI code developed by by OpenAI, ChatGPT, inside their products like Copilot, etc. And this is obviously an edge for Microsoft at the moment, that they can attract more customers. So here they are stating that the AI advantages also is from every layer of the tech. It's from Azure to Office 360, Copilot, the generative AI assistants, workflows, GitHub, Copilot. Um, so Microsoft are having a very dominating presence across their suite. They are going to be able to integrate, and I agree, um, the Copilot in both Word, in Excel, in everything they do, and they will really be the hub of the future. So for me, they are really a main player in the AI space, um, and I think they're saying here that Microsoft is doing is continuing to rely on really, really important partners, but also hedging their bets a bit by developing their own AI internally as well. So that's a good call out there. So some other RBC analyst here says there are head start in AI based on the OpenAI bet, and at the moment, Microsoft do not recognize profits from OpenAI, and so at the moment this is a loss. But when OpenAI gets more profitable, obviously that will be a huge positive for Microsoft, and that is not priced in. Some people even think that OpenAI will never be profitable, but I'm just looking at my own way of using the internet, the searches, etc. And use ChatGPT all the time now. It's the flow and the knowledge and the way it interacts with you just brings that efficiency to another level compared to Google search, for example. So I like basically I used to Google search all the time, and now I'm using ChatGPT all the time. So I think we're gonna have a shift here. I don't think everyone will go from Google search to Gemini. I think over time, ChatGPT will take a part of that market, and it is such it's a multi-trillion dollar market. So Microsoft being a part of that, they also have the Bing search that is take. I think it's like 12% of compared to like Google, who has 90% with Google search, but is still growing. So that's also something to keep in mind. Yeah, so here's also some the bottom line. Someone has a buy rating of 640, so that's a lot of upside at the moment compared to 485. And the next big unlock will be the AI agents, and we know that AI agents will help us to be truly efficient with a lot of tasks, so we can free up the human mind to more creative and long-term projects. And that is what we are waiting for at the moment. And I actually have another company later on among those three that are working with AI agents. Yeah, basically they are going in very hard on AI, and if AI is just all for the show, then obviously the AI bet will be a very expensive one for Microsoft, but they will survive it compared to many other companies. But I do not think that is the case with. And here you can see a snapshot of Microsoft's cloud and AI growth, and they are calling their cloud Microsoft Azure. The revenue is now 75 billion, and if you think about what we went through earlier, if they have revenues around 210 billion dollars, the Azure cloud revenue is actually getting closer to half of the total revenues. I think in the future, obviously, everything will be integrated into the cloud. This has been something going on for a long time for companies like Microsoft, and also the AWS services for Amazon. Also, Google are getting stronger in these type of businesses, and we just see if we think about the sheer number of revenue that Microsoft has, and also the percent of growth and how big part of the company's revenue streams that the cloud is. It's not hard to fathom that this company in the future will have by far the most revenues of all companies out there. So I think they are in a really good spot, and companies know that Microsoft might have the strongest cloud offering out there. They are growing faster than AWS from Amazon, for example. So yeah, the cloud revenue 46.7 billion, 40% Azure cloud growth, and yeah, the cloud revenue breakdown: 45% intelligent cloud, 33% products and businesses, and also 22% personal computers, etc. So that's that. I think we are having a solid foundation. The key metrics in terms of valuation is quite good for Microsoft. They are not undervalued, not overvalued, but I think the marketplace has not fully priced in the potential revenue growth for this company, and especially the earnings per share growth. I'm quite sure that Microsoft, with their high capex spending, are, despite that having such a high earnings per share, they are actually choosing that they don't want to go higher in terms of earnings, because that would basically mean that they would tax more. But now, when big tax cuts are coming, I think they are going to push the earnings very high, so they can make that balance sheet even better and be ready for the future. So don't underestimate that a lot of companies might boost their earnings per share next year when um, the the tax is going down. So they will be strategic long term to just keep their market share steady and increase it. So I'm quite confident in the position of Microsoft, and that is why it's a long term play for me in the stock market, at least 5 years, 5 to 10 years. And I also like how Nadeya is talking about the longer arcs when he is planning his businesses. So I have a strong belief in this CEO, and that is also something that I think is important, that the CEO gets you excited. So that's that. I'm heading over to the next and the next stock for 2025 is a company with a market cap around $330 billion. It's AMD, Advanced Micro Devices. And why do I have them on the list? It's a company that I follow close. The stock price has stabilized now. It's a bit lower than at the highs. I feel like they have a lot of things going on. The revenue will have a massive upside in 2026. It's already confirmed with the deals with HPE and OpenAI, and they also have the deals since before with the companies they have. They have their uh, GPUs and their CPUs and the core offering. Obviously, they are getting better in the graphic cards unit. Their ROCm software system is getting better. They're gonna ramp up the GPU 455X next year with the Helios rack system. So they have so many things going on now. So this is like a perfect storm for AMD. So I feel like they are now just relaxing. They are cooking. Some other companies like Broadcom, Micron has have their place in the limelight lately, where AMD now has been like sideways for a while. They were at the peak here around November, and now it's a bit down a bit. But this doesn't concern me, and I'm gonna tell you why. So here you say some analysts says keep on buying AMD, etc., etc. So basically, the revenue of this company has increased a lot over the years. This is from 2020 to 2024. Don't forget that they have bought Exilink also along the way. That has boosted the revenue numbers. Uh, but the even more telling picture is that the quarterly earnings and especially the quarterly revenues has gone from $6.8 billion to the latest quarter $9.25 billion, and now getting closer to $10 billion. And I think if we can push the quarterly revenues to $12.5 billion, that will be 50 billion dollars a year, and that will give us a great opportunity if we can have, for example, a price per sale around 15. That would mean with a $50 billion revenue, a market cap around $750 billion, and that will mean that the stock price is doubling from now, and I can actually see that happening in 1 to 2 years. So I feel the opportunity and the upside is too big not to invest in AMD for me personally. That is why I'm long in this company, and I feel like the only thing that can make them fail to reach $50 billion in revenue in the next 2 years is basically they fail to execute massively. Um, yeah, they don't even count at the moment the GPUs they were hopefully was going to sell to China. So that is also a potential upside if the relationship gets better with China. But besides, we have the deal with OpenAI starting 2026, and that's deal could be around $25 billion a year per year. So that is like almost the whole year for everything they are doing at the moment, just from one company. And they will have Meta, which they sell a lot of things to, Microsoft. They have Oracle. They are ramping up their sell through to Oracle. They have HPE, the Hewlett Packard enterprise. They're high performance computers, clouds, etc. A lot of deals with them. So AMD are going really hard on revenue gains in 2026. And I don't think the marketplace has fully priced it in, because there are so much noise about the AI. Oh, it's overspending, infrastructure is too high, etc. But if you look at companies like Google, Microsoft, Amazon, Meta, etc., they have an infinite amount of money, and they need to improve to stay at the best and continue to provide the services that the consumer expect. And they need to be better than, for example, TikTok, or Microsoft needs to be better than Google, and Google needs to be better than Microsoft, and it needs to be better than companies in Europe, in China, etc. So they won't slow down. We have other companies that are buying a lot of GPUs, for example, Tesla, XAI, etc. It's just getting more and bigger. So I feel like, despite the noise around AI and AI boom and too high valuations, I don't think AMD has too high valuation. I mean, you can just read the revenue numbers, read the earnings, read where they are heading, and compare with the market cap. If you do that, you can see that AMD has a clear path going to 3 to 5x in the market cap the next 10 years. When I do that valuation with some other companies, like, for example, Palantir or Tesla or some other high growth company, I have a much harder time to imagine where the future is going. But with AMD, listening to Lisa Su, etc., and the projection of the revenue, 35% per year that they are aiming at, I can really see the path like 5 to 10 years ahead. Quite, I'm quite certain about where the revenue are going. I know the gross margin is growing also. They might not reach the levels of Broadcom or Nvidia in terms of gross margin, but it's still getting better every year. Maybe reaching 60% in like 4 or 5 years. So we will have a lot of earnings growth, a lot of revenue growth for this company, and that is why I have invested in them. Just fast here, you can see that they are ramping up the next generation. They will have the MI 430X for for HPE here, and that is based on the next generation AMD EPYC Venice CPU, advancing HPC and sovereign AI research across Europe. So this is the version they have when they are gonna have a more safe product in terms of sovereign AI research and such offerings, while they also have the more business-esque version MI 455X that companies like OpenAI, etc., will buy. So it's different type of offerings here, skewed towards different customer and consumers. HP is a huge company, so they are also buying the next gen. We did see OpenAI, Oracle gonna buy the next gen of AMD, and this will ramp up their revenue opportunity so much for them. I did also see interesting news here from them. 24th of November, they became with the, this is not the newest GPU, but with the MI 300 and X GPU. I think it was from 2023, 2024. Cypher just used that GPU, and through only AMD products, they actually perform close to Alibaba's Gwen, and I think Gemma is it Google or Amazon or something like that. Anyway, it's going very good for AMD at the moment. They were also better than Facebook's Llama version. You can see here Llama from Meta, and Gemma was Google. So that is old AMD products. Just think about having the open source new version of newer AMD products. I'm so excited about this company, but you should always do your own due diligence. And this is a long-term hold. Obviously, short-term, the whole AI market can go down quick. It can go down fast. It can be hard if you buy stocks on leverage, etc. So you have to know what you are doing and believe in yourself. Do your own due diligence. Listen to earnings call, etc. That is what I'm saying. You never know everything that's going on in the future, everything that's happening. So you have to have that uh, diversification in the way you're. And my last stock pick for 2026 is a $165 billion SaaS company, and it's ServiceNow. It's a company with Bill McDermott as CEO. A CEO I just love to listen to. Very energetic, long-term vision, and the stock has not performed very good lately. But I still feel like long-term, this company is heading at the correct direction. Um, so I don't know what this. Oh, yeah, looks like a bit strange, but that is because they have just performed a stock split 5-1. So uh, that is why this graph seems a little bit strange at the moment. But yeah, you can see here that they are doing as today 5-1 split. Anyway, the stock has not performed very good the latest 3 to 6 months. But I feel in terms of key metrics, where they are heading with the revenue, with the earnings per share, with the vision, with the growth prospects, with the AI opportunity, with the data analytics, with their CRM, customer relation management, this company is doing everything right. And despite being performing very good in terms of execution in real opportunities, the latest 4 to 5 years, the stock price has not really um, performed on par with that type of execution, I believe, and that is why I see an opportunity to build a little position here in ServiceNow. So this company, if we see per year here, you can see since 2020 they have gone from 4.5 billion dollars in revenue to $11 billion. So they are growing quite fast every year. The net income is also improving. Now we have $1.4 billion. Obviously, if the market cap is $165 billion, it will still be a P ratio of 100, so or more. So the P ratio is still quite high. But when you have SaaS companies and CRM companies and AI agents companies, for example, like Salesforce, a similar company, when they really get going, the cash flow is enormous. The opportunity to reinvest and grow and just eat your way into the market is getting the compounding effect, and the earnings per share will just keep exploding right up like a rocket. So I'm feeling very comfortable with where they are heading here. So maybe the only strange thing is why the stock price hasn't really kept up with this um, execution that they have performed in terms of the leadership and um, income and market share gains, customer relations, etc. And I guess the company was quite hot and quite high valued for a while, and that is why um, they have, like, in terms of market cap and stock price valuation, being quite flat. So sometimes investors are afraid to enter a stock that has been sideways or down for a bit, and they don't really look at the fundamentals. They just want a stock with upward momentum, for example, like Palantir. Maybe the fundamentals of that company is not really close to where the stock price has been performing, but some companies like to ride the momentum. But I'm not that type of investor. That is not the type of YouTube channel I want to grow. So obviously, if you are the type of investor, you can look at my YouTube channel, but the type of tips and the way I invest is not similar to a momentum investor. Is more like I like to see some fundamentals, because if I don't do that, if I don't understand where the company is going in terms of revenue, earnings per share, cash flow, vision, then if I don't have that belief and belief system, I can't hold the stock or the shares of the company when the market turns down. I will get shaky hands and I will sell the company, maybe because I don't really understand the fundamentals. That was my mistake both with Micron, but especially with Broadcom. With Micron, I knew that when they were about $60 a share, that the AI market will grow a lot. It will just be more compute in the future, and they will have an opportunity to really um, increase prices. But when I looked at Micron, I feel like they are a very volatile company in terms of share the stock price going up and down, and they are going in cycles. So I wasn't sure, do I dare to put the money when just it can get right down like half, that stock can get halved in market cap quite fast. So I chickened out and sold my shares, and now it's 4x since that. So the analysis was correct, but it wasn't enough for me to keep hold of the shares. So that is what I'm saying to you. You have to do your own due diligence and really research the companies you invest in, because if you don't do, it's easily to let go of them. The same with Broadcom. I bought it because I feel like I need to have something besides AMD in my portfolio in the semiconductor space that are gonna get in this wave of computing and internet and scaling, what I need just to have more diversification in my portfolio. And I like that they were having the acquisition they did, etc. 2023. But if I have had read even more about them and understand the TPU market and where they were heading, and the type of global scale leadership in just pure infrastructure, um, I would probably have kept hold of the shares there also, and they were 3x since I sold them. So I'm speaking from my own experience here that I in, take time to invest in fundamentals and understand the company, because it's easy to just buy something, sell something, and then regret. So for me, to earn money in the stock market, if you don't buy funds or indexes, then you have to have a long-term vision. The companies you buy, try to buy them when the stock price is a bit lower, and have a long-term view of where they are heading. And that is what I'm feeling at the moment with ServiceNow. So as of the latest quarter, they were $3.4 billion. So if we multiply that with, like, for example, $3.5 billion x4, we are heading around $14 billion. And that is closing in on price per sales on 11 to 12. And I think for a company like ServiceNow, that type of innovation they have and the growth over 20% every year almost, leadership in AI agents, SaaS, big contracts, happy consumers and customers, I think that is quite, in this time and age, quite low price per sales. But CRM companies and SaaS companies has not really been the hottest of topics lately. But I think the AI boom and the companies that are really gonna use it, besides the big dogs, um, is companies like ServiceNow. They are so good in integrating AI in everything they do, and through using ServiceNow, you can actually get hold of all the tools you need as a company, as a government, as a municipality to perform long term. Um, so the valuation is much more attractive now than it has been in a long time, and they are very steadily increasing the revenues, the earnings, the execution. And I really like when the CEO is talking about how he sees the future, where they are heading long term. And also, they did not just perform a stock split 5.5 through 1 as of now, which can boost the company's market share and stock price. Also, they just did an acquisition that has pushed the company down, because the stock market do not like when companies in the size of like $160 billion buy other companies quite expensive, because that will um, mean that they are taking on more liabilities. Maybe the earnings per share short term will be affected. The gross margin can be affected short term. They need to integrate this company into their company. So the next 6 to 12 months, they might not have a really good contribution from Moveworks into what they are doing. But I think despite this affecting the stock price short term, which provides an opportunity for investors, long term, Bill McDermott and his crew would not do this if they don't believe that this is the right thing to do, because they have never bought a company this expensive before. So they really believes that this is the opportunity to go all in on what they are doing. So I'm gonna read fast for you that yeah, basically the agentic AI intelligent workflows and enterprise search deliver the world's most advanced AI platform for work and create on AI native front door for employee engagement. So So this is what they want to do at ServiceNow, and that's why they are buying MoveWorks. And basically, it's about the vision to put AI to work for the people, combining ServiceNow trusted agentic AI. So agentic AI, you heard a lot of it. It's the future, and I think ServiceNow can really execute on that. And using intelligent workflows with the MoveWorks front end AI assistant, enterprise search, and agentic reasoning engine. So they're going to mash them together, and hopefully they will have the AI platform to redefine how employees engage with work, drive faster outcomes, scale AI adoption, and create AI experience people love to see. So this is all about getting out there, have the best product. They already have a lot of happy consumers, customers. If they have a product that will be as good as Microsoft, Google, Salesforce, or even better, they have an opportunity here in the AI agent market to grow 20-30% every year, year in, year out. And if they do that, and that accretes to earnings, this company will just have be a 5, 6, 700 billion dollar company. So I think the opportunity is immense. I'm really believe in what they are doing here, and I think this, despite a lot of people short term believe this type of move they do here for MoveWorks is affecting the earnings per share and provide some risk. I think this is what companies need to do, and they are able to do that if they have a long term vision. No one would talk about this if ServiceNow was a private company, but because it's a public company, the stock price will get affected and people might turn negative on the company. The stock price has not really performed, even though I showed you that the metrics, key metrics, the KPI metrics for the company, the revenue, the cash flow, everything's getting better. They have getting more happy customers. They are growing their relations very good. So yeah, I believe this is a great play in the future AI space long term. Maybe not the best play like the next 6 months, but for me, even though I say 2026, it's always stock picks that is even longer, 5 to 10 years. That is how I see the market, and I hope what I showed you today was something that you could learn of, that you find it pleasant to listen to, and that you actually like what I'm doing here at the channel. So I'm happy to grow this channel with you. If you enjoy what I'm doing here, just you're free to subscribe and share what I'm doing and search me up, because in the algorithm, sometimes even if you just subscribe, that's not enough for you to get me into your home feed at the YouTube page. You maybe need to search me up sometimes.